The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I want to start out the show just a little bit differently today. As you get old, folks, and you reach into that eighth decade, you start to lose friends. I lost one of my best friends a couple of years ago, Mark Douglas, and then on New Year's Eve, I lost another one of my good buddies, Bob Gumillion. He was the coin dealer that I met in 1972. He had just bought Wilshire Coin there at the corner of Wilshire and Lincoln in Santa Monica. And boy, did we have a lot of fun through the years. He had rough times over the past 10 years. He was living in a nursing home, but he passed away quietly. But as I was thinking about him, which I did over the weekend, I called my kids, my sister, a bunch of other friends, and each one of them recalled some of the funny things and the fun things that we had done. And I started to write down the names of the people that Bob had introduced me to through that coin store over the years, and that was 4 years before I went to work for Drexel. And then when I got into work for Drexel, we were selling Cougarans and 100 krona, Swedish 100 kronas, Austrian coronas, and then we had Mexican 50 peso Mexican gold and a bunch of other stuff. And they were trying to find dealers around the Southern California area, and I suggested Bob as one of them, and he was one of the three. And Bob for the next quite a few years was averaging about somewhere between 500 and 1,000 coins a month. And he would make anywhere from $15 to $20 on each coin, so it was pretty good for him. Anyway, he passed away. It was he was one of the coin dealers that was involved with the Laverne Redfield collection back in 1974, 75, 75 or 76, I believe, with Steve Markoff and stuff. Anyway, I set a little white light out for him. I'm sure he's in good hands. He was certainly a generous human being. Okay, boys and girls, let's move on. We're going to take a look here at the FTSE. As you can see, we made some type of an expansion pattern here on this 4-hour chart, but it's rather short term, so be advised that that's what's going on here. Just 1 second, please. The new year has brung in some bells, which is ringing my let's look up here at what's going on here. It's with the E-mini is making the 61% retracement level up here at this 2866.50 level. And the Nasdaq has just hit it also. Of course, the Dow is above the 78% level, so we're starting out strong in stocks this morning to start out the new year. So give me 1 second to turn off this limit minder. It's going to drive me crazy, so just give me 1 second here. What I do is I put these on when I think they're at critical prices, and then I like to hear how often they're hitting them, because as they go above it, that's telling you that it's very strong. But right now we're sitting right at that 61% retracement. The big news this morning, folks, appears to be the gold market. The Bloomberg was reporting it was one of the biggest runs in gold that we've had since 2011. If you look at a chart, that's just false. It's had a straight up move for 2 weeks, but we've had bigger runs than this over a period of time. For a 2-week period, yes, it is one of the biggest ones we've had. We've rallied, if we went from that 1238 level, and we're around 1220 now, so we're up about 80 some bucks an ounce here in just a matter of a few weeks. All I think is that it's starting. I think we got a long way to go. I'm looking for a retracement in this area. We're still seeing silver lagging a bit, and the XAU, and also the HUI is also starting to lag a little bit. But we're up about $7 in gold today, so that might change things. But if you take a look at this XAU chart, Well, I'll get to the DAX in just a minute, folks, but if you take a look at the XAU chart here, you'll notice that it's been, much, much weaker. We've taken out the highs of October, November in the gold, and you can see where we are with the XAU. And if we look at the, that was HUI, let's look at the XAU here, and we'll put it up here to take a look at it, and we'll see what's going on here. One of the things that I'm going to do here in the next week or so, Bob had many friends in the business, and several of these guys are still, in the coin and bullion business. And one of them was very close to Bob and also to me. And I'm going to try to get him as a guest to tell some of the stories about the Laverne Redfield collection, because they were there, pulling the coins out of the basement. We remember it very well. So he'll give some ideas of what really happened, because the stories that you read on the internet are not quite as reputable as you might think. So we'll look at that a little bit more. Anyway, gold looks very bullish, folks. The $64 question is whether we're going to turn from here or not. Now remember, today is a super full moon. Actually, it came in yesterday late, and we are looking in a super full moon is one where you have a really tight formation of perigee, the actual time of the exact full moon, and then also the movement over the equator. All that comes really tightly formed, and Norm Winsky, highlighted this on the show last Thursday, that this was going to be something, really dramatic. So whether it makes these markets move or not, I don't know, but we're having a pretty good move in stocks already this morning, and the $64 question is how much higher they're going to go, and they could go a whole lot higher. So we don't know, because it was up in 2017 after that was the 8th year, and W.D. Gann said that the years ending in 7 were death years, and it was certainly death to the shorts. It was not death to anybody else. But the volatility index has held up relatively well, and that's telling you that some people are taking some type of insurance. The rest of the markets across the globe, none of them have had a run like we've had. Well, there's been a couple of them, but those are smaller markets. But that's the small. Those are smaller markets from what we're usually looking at. We're having a really important move in the currencies, folks. I highlighted this in the newsletter this week, and when we come back from the break, I will certainly, try to show you, give you an idea of what I was looking at anyway. But the interest rate markets are also, heading lower, which means the, interest rates heading higher. That means that bonds and notes are heading lower. We're ready to break out of some pretty substantial support down here at this 150 level in the Treasury bonds, and also breaking below some support in the Treasury notes. And the rates are going higher, folks. It's just a question of whether we're going to do it now or later. Let me get the chart up for the DAX. You'll see that we've broken down in the DAX, and we've started to make some lows, which is totally opposite of what's happening in the UK. So we're at a pretty substantial support down here at around 12,600 in the DAX, and if that can hold, that is nothing more than a normal correction. But it has been lagging the rest of the markets without any trouble at all. Tomorrow, we're going to take a break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted the chart of the U.S. dollar index going back over the last 6 months. We had that nice head and shoulders pattern that ended in October. We retested it again in March, and then, of course, last week we started to break below it. And as you can see by looking at this chart, we're looking at an ABCD pattern coming in down at this level of 91.50. Our good friend Marshall from the TFNN Den just posted the fact that this index is trading at 91.56. This morning, I don't know what the low was as of yet, but it looks pretty close to that D spot. Now, those of you that, well, I ought to keep in mind here that H.M. Gartley said to look for the first ABCD correction in a market for bullishness, and this is certainly the first big ABCD correction that we've had here, since September. We had a small one in November when the head and shoulders pattern was there. Then we had the really good rally when it went from 92.50 to 94.50, and now we're coming down, completing the D point today. Those of you that trade foreign currencies, actively, you'll notice that this morning's high that we made in the 120.70 level in the 91.47, that's spot on. That was the low or the last price, Marshall? Can you give me? I can't pull it up while I'm on the show here. So if 91.47, that should have pretty much been it. And if we're trading at 91.57, that might be it. So we'll wait. But anyway, that particular pattern in the euro was spot on at 120.70. That was a 78% retracement. We took out the high of the previous week. We did the same thing pretty much in the British pound and also the Japanese yen, and also the one that has been, extremely good to us over the past few weeks is we'll put up this chart here of the Australian dollar. We went up to the 78.45, 78.43 level in the Canadian dollar, which was a beautiful three-drive pattern on the hourly chart. I sent that one out on a video last night because of the way the dollar was acting. I described all that in one of the videos for the 24/7 folks, and hopefully they were able to, to do something with that. But just at a critical level, there's no question about it, because Okay, we're up to 91.63. I think some type of a bottom's been made here with this ABCD pattern. We won't know for sure until the next day or so. But remember that the beginning of the year, for some reason, there's some seasonals that come into foreign exchange. You can prove that yourself. Just go back and look during the period of January. Look at that whole month, and you'll see some times where you've had some major highs or lows come in. At that time, I don't know if it's the people planning what they're going to be buying or selling, with the U.S. dollar, but we'll have to see. Folks, when the U.S. dollar goes down like it has, that means our goods are less expensive. It's less expensive to take a vacation to the United States. And so, keep in mind that if this keeps up, we're giving bargain prices away, which isn't always a good thing. This week in the newsletter, because it was the first of the year, I wanted to focus on a couple of things that I thought were historical, and I don't think there's any question about the one I'm going to do next. Oh dear, you're not going to believe. Oh, there we go. I thought we were going to have a little bit of a problem here. Let me get this up here to take a look at it, but I wanted to bring this to your attention here. This is what I think is the most important thing that happened in the past year, and that is the Dow Jones Industrial Average. If you'll look at the low at point C there, which was the solar eclipse on the 21st, we left a gap there, and then we left 1, 2, 3, 4, 5, 6, 7, 8 gaps have been unfilled in the Dow Jones Industrial Average. We've never had a period of 6 months for anything like that, let alone a year. So that, to me, is the most dramatic thing from a technical basis that we've seen. In addition to that, the fact that the volatility index did not totally collapse. I mean, those people that don't believe in the volatility index had every chance to put it in its grave and bury it, but in fact, that has not happened. So keep in mind that this might be something, very historical. You just don't see anything like this very often. I've been doing this for a very long time, plus I've studied everything that the Dow's put up since it started being posted in 1886, I believe. And, Twentyman and I have collected all that data, and we've looked at the gaps, and there just aren't any. But now we've got 9 of them that we're looking at. Whether they'll start to be filled or not, we'll have to wait and see. Okay, let's move on to one of the other things that I think is very important. I talked about the Dow Jones. I talked about the utility, the interest rate market. We'll cover that in just a little bit. I wanted to talk a little bit more about Bitcoin because it's getting a lot of things going on. This is what we're looking at right now. This is pretty much up to date. We're trading around 13,000. And the reason why I'm bringing this up, folks, is because there must be something to it because there's so many people trading it now. And I don't know the ramifications of it, but, I think we should start looking at this. Comes from our good friend over across the pond. And you notice that we have incredible patterns here going over since early December. This is basically a 4-hour chart. And as you can see here, we have a really strong structural ABCD pattern that is going to take us down to just about the 8,500 level, probably a little bit below 8,000. And then we'll watch it then. But if you stop and think that, Bitcoin was at 500, just a couple of years ago, well, last year, I guess, and, it went up to 19,500. And if you just did a, 38% retracement of that, you could easily get a move back to 12,000 and it could still be bullish. But the fact that it's trading so beautifully technical, you have to pay close attention to that. As a technician, you should, and I'm not trading it. And I mean, first of all, the volume on the CME is virtually nothing, folks. We've got less than 1,000 contracts after the first week and a half. So there's even though they're getting a lot of press on it, there are not a lot of people in there playing. So we'll see. By the way, I am expecting a big move up in wheat this morning and also in beans and in corn. I don't know if it's going to happen or not, but it's really ready to move, and we're over this super full moon. So, keep a close eye on it. I don't know if it didn't do any overnight trading last night because of the holiday. but it looks like a really positive pattern. I don't know anything about the fundamentals, just the pattern that we're seeing in the wheat, grains, wheat, and also the grains and oil seeds are very positive. So we're going to see if that's going to be something to look at. But we really need to pay attention to it this morning, I believe, and that's what it looks like. We'll have a pretty good year in some of those because we're at such a low level. The weather's so cold back there. We'll cover the crude oil when we get back because that was another one that I wanted to focus on. Folks, I mean, when you got the weather minus everywhere and you can't get heating oil up and you can't get crude oil up, there's something wrong with those markets because that's the major fundamental stuff. So I'd be looking for shorts in those levels because if you're -8 in Connecticut and Niagara Falls is frozen over, something's not right. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to talk a little bit about the weather here because we've got some terrible weather. I heard on the news that it was so cold in Chicago that the new Apple store, the big glass windows cracked. I don't know if that's true or not, but I heard that on the, on the news. That's pretty chilly. I remember being in Chicago trading on the floor in 1983. And it was so cold in the sky or the high rise that I was living in that the windows froze on the inside. and oh my goodness, it was terrible. Then when they finally thawed, it ruined ruined all the carpets. But boy, that was the worst summer ever. The blizzard of '83, most of Lake Michigan froze. And as a matter of fact, this is only the second time that Niagara Falls has frozen. It froze in 1911, and then it froze partially here this past week with the cold level they're having. I just don't like cold weather. It's much easier to cool off than it is to get warm. So that's neither here nor there. It's very chilly here in Tucson today. It's going to be 80, but the wind chill factor is going to take it down to about 77. So we're hoping to get through here these troubling times with all this cold weather. By the way, those of you folks, I know some of you folks don't go to the movies, but I've seen the trailers for the movie The Darkest Hour, which is about one of my favorite people, Winston Churchill. And Gary Oldman does such a fabulous job. If he doesn't get an Academy Award, it would be highway robbery. But it's really something, and it's really. Gator said it froze sometime in the mid '60s too. Well, the news said it was 1911. That was one of the things that I've said. Okay, there's someone posting some information from Kevin Murphy. He was, of course, a disciple of Bill Ehrman, and I'm going to try to have him on the show soon, but right now his schedule doesn't allow it, so we'll watch that. By the way, I don't know if any of you watched that Rose Bowl game between Georgia and Oklahoma, but boy, that had to be one of the best games ever. It was really going to see what's going. How much higher did the wheat and beans open higher? I'm just curious because I had a really strong idea that they were going to be substantially higher, and I'm just curious. I hope the beans didn't open up more than 10 points higher because I have to like 4 to 5. That's good. That's 4 to 5 points is right in the ballpark. So we'll see what happens. But I think this is just getting started, so we'll be watching it very closely here, because they're very cheap already, and with the U.S. dollar as cheap as it is, that we're giving away these prices. So we'll see what's going on. Whoa, does that really happen? That the kids were playing and they slid over the edge and they were never found? Wow, that's really sad. Well, that's really another thing that's happening, folks, in the news, and that's what's going on in Iran. And wow, you actually saw that, Gator? Wow, that is really that's really scary. Anytime you see anybody die is wowee, that's really scary. Holy cow! I should have you as a guest on the show to describe that. That's really very, very scary. Anyway, let's move on to this. What's going on in Iran, folks? Those of you who weren't around in 1970s when we were having when the hostages were in Iran. This was a big change, when the Shah left, and this was the big regime change when the Khomeinis came in, and the Ayatollahs, and changed everything. And this might be the sign that there could be an Arab Spring over there, where they're going to change, regimes. And if that's the case, that's going to change the whole dynamics of the Middle East, because if you get those extremists out of there, that means that these groups like ISIS and Hezbollah and some of these others are going to have a really difficult time, and that's also going to put pressure, on Syria. So I don't know if it's going to happen or not, but the fact that these people are dying for it, that's a very important thing. But remember, that happened in Cuba, and nothing really happened, and the same thing's happening in Venezuela, and nothing's happening there either. But the fact that this is happening, if it gets greater and greater, governments are toppled by stuff like this. So it's really interesting, to see, what's going on. But we'll neither here nor there. Okay, move on to the first question that we have is, and that is about the state of this gold market. When will we get a correction? Folks, we're over the astrological time with this super full moon that we're looking at. The thing is that we're much higher in the gold than I thought we were going to get. I thought 1307 would probably be it, and we've gone another $10 beyond that. So we'll see if it's going to have a correction. But when the correction does come, we want to watch it real closly because it'll give us a pretty good chance. If we look at the patterns on the half hour and the hourly charts, are going to give you a pretty good spot to buy it. Just like when we were watching it at the 1240 level that Mr. Z here in the room pointed out to us several times. So we had some really important support there. It stayed there for 2 days, and it's had one heck of a move. So we'll see. It'll be very, very interesting to see, what happens, with some of these things. It will be really exciting. I think gold has the potential to be one of the bigger surprises of the year for 2018. And the reason I say that is the long-term chart in the gold and silver that we've talked about here so many times. I don't want to go over it again, is that we had these seasonal lows to come in. They came in at a much higher level this year, especially in the gold market. It was right at a 50% of one and 38% of another, and there were 4 ratios there right at that 1240 level, and it so far it's started to have a pretty good move. But how much higher it's going to go. See, once you go past 8 days, folks, all the things are out the window. All the statistics are out the window, and we're well into 12 days now. The biggest runs we've had, at least from my previous knowledge, I think are 22 days. I remember silver back in the 70s, going into the high into January of 1980 was up 22 days in a row. Of course, it was down 22 days in a row, a few months later. But 22 was it stood for sugar and silver and a couple of other things. But 22 was about the most number of days that we'd ever seen. So we'll look at those one at a time. Now, the crude oil is up very slightly today, as is the heating oil. Given the fact that this weather is so cold, I just don't understand why it's up not even $1.50 or so in the crude oil. And when you add to that they're having all this trouble in Iran, which could really dampen the oil supply, because there's a huge supplier of oil, that would really make it. So the weather in Tucson here is going to be quite nice today. It's going to be almost 80, and we're about 50 already this morning. The low last night was 45, so it's not too bad. Tucson was ranked as one of the best. It was the best city for living in the United States as far as cost of living, which is pretty good. No, the only reason I focus on the news is because of the. But see, Peak, what you're saying here, I'm focused on the news because if the news does not reflect what should be happening in the market, that's really good information, because that means that there's not much, to push it higher. That's what I'm watching. So I'm watching for a potential short in crude oil, and that's what I'm watching. So we'll see. That's really bullish news, by the way. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and hold on one second, please. We've had a huge gap in the soybean market, folks. This is you can't buy it with this gap up like this, but it was certainly screaming to be bought. Just this last week, as we were trying to point out. But the corn is still acting. You could still buy corn here. In my opinion, is March corn's trading around 353. The previous low that we had here was down around 346. So I think that's probably a good buy. But the beans gapped up, substantially. Well over, it just well, it's a big gap in the beans, 15 cents higher. That's quite a bit. So I know a couple people that are very happy about that, but we're going to wait and see what happens. Some of these gaps, of course, will be filled, but at least that's what's going on in the market right now. Someone's asked a question about this lunar cycle. This is just a full moon, which is a super full moon, means that it has extra power. Because it's at perigee, where the Earth is as close to the moon that it possibly gets. That's why the moon looks so big, the full moon. We had Al Larson on, if you remember, just about 2 weeks ago, and he talked about this event coming up. And that, of course, he is moontide, so he knows more about this stuff than anybody I've ever met. And he says this is a very, very important turning point in a lot of different markets. So whether that's going to be true or not, we want to wait and see, but it's something big for sure that we see going on. One of the things that we tested when I was writing the book, Astro Cycles, A Trader's Viewpoint, was that lunar phenomenon where we had that real tight formation, and that is one of the higher shorter term turning points that we see. In fact, that's why Norm Winsky was on last week to point that out, that it was going to be something pretty dramatic. But remember, he pointed out that December 11th low in the gold. And that's when, we were trading down there at the 1238 level, and that had to, be a big move. We were fortunate enough to be looking to be buyers down there, but that's something that, looks pretty good. We're trading around 13-14 now in the gold. So look for a minimum of a $34 correction. I know you don't think it could happen from here, but this is when it usually does happen. So keep in mind that we're looking at the pattern to pull back to a really nice ratio. That's what we're looking at. I don't see some of the folks this morning have posted some work from Martin Armstrong, who is one of the smarter dudes in this business, and he was talking about October being, getting ready for the really cold winter, and that's in fact what's happened so far, and it's probably just starting. I think they have another 6 or 7 days of cold weather being forecast before there's any really serious break in it, but we'll have to wait and see. So far, the crude oil is still up on the day, and also the heating oil. Maybe they'll start to rally later as the weather possibly gets better. But the fact that we had all these things happening in the crude and the crude oil and the heating oil, you would think it would be sharply higher if that was going to be the case. So we'll see, what's going to be happening here. The cattle and hogs. Someone's asked a question about that. They look like they're ready to go lower. I haven't seen the opening in the cattle and hogs yet, but they look like they were ready to go lower. The only thing that would change that is if they were to get higher than they were on Friday, then that pattern would be breaking. But I haven't checked the prices of the cattle yet. But to me, the cattle prices look. The fact is, I can post this for you and to show you what I was looking at, so you get an idea that we'll be able to see, because we just completed a really nice ABCD pattern here in the February cattle. The last I had was 2160. I don't know where they opened this morning because I don't get the prices, but if they gap above that 2160 level, this would be a failed pattern. But right now it's completed, and we're seeing what's going on. So we'll see what's, guys. Yeah, you're right. The feeder cattle, Mr. Z is pointing, in fact, the feeder cattle are the baby cattle, the teenage cattle. They weigh around 600 pounds. 1,200 pounds is when they get to be the big boys. But when it's that cold out there, and they're out there in Montana and Wyoming and stuff, some of those cows die. And when they die, you stop and think 600 pounds. At that price, you're talking about a pretty expensive animal. That's one of the reasons why it's such a tough business. That it is weather related. That's for sure. The problem is that the people can't get into the stores to buy the meat once it is done, and they can't get it shipped, from the packing houses, because sometimes it's too cold and the weather's too bad. So there's a lot of factors that come in here, and those are the wildest for sure. But weather markets are you're right, Gator. That's fresh frozen beef. That's flash frozen. You're absolutely correct. Anyway, I haven't traded feeder cattle in many years, but I follow it for a couple of folks that have an interest in it, and we're watching. Another one that looks pretty interesting here that is really starting to move now is the natural gas. Let's put this up, which it should be, because these people that have these smaller units, they don't have the liquefied petroleum and stuff, and they don't have gas lines. They use the natural gas canisters and stuff, and that is really starting to move. See what's going along. Yes, we were talking about the Z. You were talking about that. About the feeders just at the low just the other day, and they did have a pretty good run. Congratulations to you on that, but congratulations to you on the grains too, because you were in there buying it, and you were also buying the silver late last week too. So you do a great job here for everybody at TFNN, and we certainly do appreciate it. By the way, I'm going to try to have Bill Meridian from Cycles Research on tomorrow. And then on Thursday, I would like to try to have our good friend Stan Harley on from the Harley Stock Market Cycles. And we'll see if we can get these gentlemen moving in, to try to come in and give us our ideas of what's going to happen to the market. So anyway, that's what we're looking at here early this morning. Stocks are still strong. We'll see how much stronger they're going to be here. We'll have to go. Well, we sold off a little bit. We're still right at the S&P here. The Dow sold off quite a bit, but the rest of it is actually the Dow's still right at the 61% retracement. The NASDAQ is sharply above their 61. It went up to the 78% retracement. So that's neither here nor there. But the Dow has been the one that's been hit. There's probably one or two Dow stocks that are probably under the weather there, that make it a little bit difficult to look at. So we'll keep an eye on that one as we look at it here this morning. Okay, the other thing that we wanted to see, the crude oil is down on the day, and the heating oil is hardly up on the day. This is not bullish news for those folks, because with the Iranian news and the other thing, you'd be thinking that would be something that would be a lot different. But we'll watch it. The NASDAQ is making new highs. And the rest of it, the Dow's making relatively new lows. So you've got to, as Basil would say, you've got a bifurcated market again. So these markets do jump around quite a bit. We have a really strong move in the cattle this morning. This is this tells us that we are going to go higher in the cattle. It's going to take out that ABCD pattern, and we'll look for the next high coming in. The grains are still strong, and we'll see we got beans up about 7, so it's acting pretty good so far. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the Treasury bonds on the daily chart. You'll know that that level of 150. 150.12, that was a 61% retracement that we tested in October. We also tested it right at Christmas. We've rallied up to 153 and change. We're trading at around 152 right now. This appears to me that we're still heading lower. Remember that the long-term chart on these things they topped well over a year and a half ago. That's when interest rates really started to move higher in the real market, but of course the Fed with quantitative easing changed all that, and we'll see how that experiment works out over a long period of time. But for the past 7 or 8 years, it's certainly been positive to the stock market and to the bond market. But right now, I still think we're heading lower in the bonds, but remember we're 2 handles higher than the low. We made a low of 150 and change. We're at 152.10 right now, so even a 382 pullback here would be a spot to possibly look for a bounce. But low overall, the charts look extremely bearish, folks. That's all I can say. And we're getting what's so strange about this is that you've got interest rates going higher and our dollar going lower. That doesn't make any sense, because as our interest rates rise, people want to buy top quality AAA stuff. And when they do that, coming from other countries, either Asia or Europe, what happens is they have to convert their currency into U.S. dollars in order to pay for it, and that strengthens the U.S. dollar, and that is not happening, folks. So there's an aberration that is something to pay attention to. I don't quite understand it because I'm only a technician, but that's something that I would be watching. The key level, of course, that we've mentioned this morning is that low we made in the dollar index so far. It was 91.46, and the ABCD pattern was right there. So this is a key day to look, because if the euro gets strong now, it gets above that 121 level, the dollar is failing, and it's going to be big moves everywhere. 877-927-6648, and a happy new year to everyone.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!